So, we've got a number one deluxe meal. Is there anything else I can get you?
Yeah, I'd also like a good night's sleep. Maybe something like the I didn't struggle all night with my uncomfortable CPAP mask.
Sir, I think what you're looking for is Inspire. It's an implant that works inside your body to treat sleep apnea without a CPAP.
Come on!
He sounds hangry. Inspire, sleep apnea innovation. Inspire is not for everyone. Talk to your doctor to see if it's right for you and review important safety information at inspiresleep.com.
And good evening. We're doing it live right here, weeknights in the 5 o'clock hour in Los Angeles. Mottek On Money 5 nights a week for you, live on the air right here in 790 KBC, streaming live online worldwide at kbc.com, and the on-demand Mottek On Money podcast for you at kbc.com, Apple, iTunes, all your favorite podcast platforms. We're also on X, formerly known as Twitter, and Instagram. Good evening. Stocks starting the new week higher. In fact, we've closed out the month of July here. July 2023 now in the Wall Street history books, booking a fifth consecutive monthly gain for the S&P 500 and NASDAQ. The Dow coming in for a closing gain today of 100 points. The S&P 500 up 7, and the NASDAQ gained nearly 30 points. The S&P 500 saw a gain of 3.1% this month, while the NASDAQ popped 4.1%, and the Dow rallied 3.4% for the month of July. Looks like the S&P 500 is now up 19.5% so far this year. And the stocks have roared back this year, on pace for the best 7 months to start a year in decades. We'll talk about that shortly with money manager Ken Winans, who's also a market historian. We're watching this week earnings news from Apple will be in focus, and Amazon. We're watching what's happening in the bond market with the Treasury yields. The yield on the 10-year note last week edging above the 4% threshold after the Fed raised short-term interest rates again this past week. We saw the Fed heads out in force today with Chicago Fed President Austin Goolsbee speaking to Yahoo Finance, saying it would be an historic triumph for the Fed to achieve a so-called soft landing, referring to the rare feat of wrestling down inflation while averting a recession. And over the weekend, we heard from Minneapolis Fed President Neil Kashkari, who ran for governor here in California. He spoke on Face the Nation over the weekend, said the central bank's current assessment is that the U.S. will pull off a so-called soft landing and avoid a recession. But he noted that core inflation, which is running at 4.1%, is still double the Fed's 2% target, as we've noted here numerous times here on Mottek On Money on 790 KBC. Los Angeles area residents until tomorrow to pay back rent for the first year and a half of the COVID pandemic. Yep, you heard me. Rent's due, a year and a half worth of back rent due tomorrow. Will there be a wave of evictions? What's next in the face of all that? I'll discuss that tonight live on the air with Daniel YUKELSON, the executive director of the Apartment Association of Greater Los Angeles. Some scary headlines lately related to Chinese computer hacking operations. How about this one? Chinese malware could cut power to U.S. military bases, businesses, and homes, according to a new report. I'll discuss that and more tonight with China expert Gordon Chang, author of The Coming Collapse of China and the Great U.S.-China Tech War. But first, on the markets, the economy, gold, oil, inflation, the whole works. Let's bring in money manager Ken Winans, now president of Winans Investments, Forbes magazine contributor, author of Investment Atlas 1 and 2. Ken Winans, thank you very much for taking the call here as July goes in the Wall Street history books. And we've kicked off the week with an extended rally here. Give us your view of things here at the moment, Ken.
Well, there's no doubt that we're having that summer rally that often people really do hope for. And, Frank, as you said, it's all about earnings, earnings, earnings. We have 80 of the S&P 500 components, and I think it's 10 of the Dow 30 components reporting earnings over the next 9 trading days. So, I mean, there is going to be volatility. I think everybody knows that. What I have noticed is that generally they've said that companies have basically beat the lowered expectations that were set earlier this year. But if a company misses it or the guidance going into the rest of the year is not good, God help those companies because the stocks just get mauled. And a good example of it is what happened over the last week and a half as you saw some of the restaurant chains come out with numbers that didn't look good. But with it being said, here we are. We're going into August. And all I would tell everybody, there are some people that are this is a very disproportionate rally. You have some big, powerful tech companies that are really powering the S&P forward ahead. They are still not back to where they were. I have to remind everybody, this is still playing catch-up to what happened last year. But there's still a lot of companies that are lagging. And I think this earnings season is either going to add some breadth and depth and power to this rally, or we could find there could be, again, not a catastrophic sell-off, but certainly a seasonal sell-off in the market as we go through August and September. But I think everybody should have their target list together, figure out what you want to buy and when you want to buy it, and step in after the earnings are posted if they are, in fact, on target.
And here we are with the Dow and the S&P 500 today at the new highs for 2023, while ending less than 4.5% off their record levels, according to the Dow Jones market folks. So looks like, well, where do you see this market go from here, Ken? Are you expecting a sell-off, or are we about to hit new highs here?
Well, here's the thing. I think there's a couple of pieces to what you just asked me. Let me reframe the question.
Okay.
Do I think there will be earnings misses? Yes. I think that there will be some companies that are still struggling with containing their costs. I mean, look at what's going on in Hollywood. Clearly, the studios are not going to be hitting their numbers by any stretch of the imagination. So you have to take it from that stone. Number two, and most people aren't even talking about this, Frank, the dollar has suddenly ramped up because of the high level of interest rates, almost 3% in a month. There are going to be some companies that are going to have a tough time exporting products when you have a strong dollar. So we might hear some news on that. But at the end of the day, I think that this is a very challenging year for any of us in investing. I still have a lot of clients telling me that, look, we had that big drop last year. We have this powerful rally this year. What do you think going forward? And I said, I think this is the way things are going forward. We're going to have higher levels of volatility. So the reason I bring it up is I have a lot of clients who are telling me, you know what, I'm nearing retirement. I bounced back. I want to put some money into some bonds. So the really good news, you talked about the Treasury bond being up north of 4%. Basically, what I would tell everybody is when you see the Treasury at 4%, that means you can find corporate paper paying 8% a year. For a lot of people, that is more enticing than putting money to work in the stock market. But getting back to your original question, Frank, no rally goes straight up forever. I expect there to be some kind of a seasonal pullback. But as I said earlier, I would not expect there to be this almighty great correction as much as it is a seasonal pullback. And I think there will be companies who want to buy. One final point I'd like to bring up. About every 4 months, I run a momentum screen to look for new potential names. I am really surprised at how much it's not industry specific, but it's company specific. And what I mean by that is I'm finding some of these very oddball companies in these strange industries that by some measure over the last 5 years, including not taking a big hit last year and actually posting good earnings this year, they're these unsung heroes of the stock market. So again, this is where you separate people who just buy an index fund from people who are really looking for those kernels of really interesting opportunities. And you have to be willing to look outside the box for names that you might not have ever heard of before.
Very interesting. And it's hard to ignore gold back above 2,000 here, Ken, up around 2002 here at the moment, getting into close to the record high, which was above 2,000, right, which we hit during the pandemic year. And we got oil above, approaching $82 a barrel here now. What about those two big ones?
Well, and most of the commodity complex, for what this is the way we call it, is actually moving north. And a big part of that, the good news is you want prices to move up for good reasons and not bad reasons. And to have oil moving up right now, I mean, I'm thrilled we're not dealing with record prices at the gas pump this summer driving season. I mean, it's high, but it's certainly nothing like it was 2 years ago. But I am still looking at, commodities like sugar, certainly cocoa. Some of these commodities are near record levels. And so I think that we still have to continue the fact that when we talk about the inflation, I mean, there's some mixed news there. Commodities move on inflation. And when you can say, look, the inflation rates are below where they were at those very scary levels, 14 months ago. But that last 2% that the Fed is trying to get our economy down to, which, by the way, might not sound like much, but the Fed realizes if we don't get the inflation rate back up to the 2% level, that means that prices will basically double at twice the rate that they had for the last 30 years. The Fed wants that last 2%, meaning getting the target down to 2%. I think they will continue to raise rates, even though the language will be softer, but they're going to continue to tighten things up. Last point, I think it's important to bring up. We talk about the economy and the soft landing. soft landing to me does not mean across the board everybody's going to have a soft landing. Some areas of the country are going to have a much harder hit than others. I think that it's safe to say that certainly as I travel around, I was in Pittsburgh last month. I've been in Vegas, Salt Lake City, certainly northern Southern California. I'm just saying that as I look around, there's different levels of development, growth, movement of things, and certainly I see it also in the Bay Area. But the point I'm trying to bring up is that I don't think we're going to have an even broad-based economic recovery as much as it's going to be pockets of strength and pockets of weakness. So particularly with real estate, I think people will find there will be hits and there will be misses. And it's just very hard to deal with these regional adjustments as we move forward. But we've got a ways to go, Frank, before we can get back to whatever we want to call normal.
It's hard to believe that it was just last October, Ken, that we had record high gas prices here in California. $6.49 was the record high average price here for regular gas in the Los Angeles area. That wasn't that long ago. Right now it's at $5.09 a gallon, well off the record high, but it's been moving up lately. What do you see ahead for oil prices here, hovering now close to $82 a barrel? And along with that oil price, we've seen higher gas prices at the pump again lately.
Yeah, I think it's actually a very complicated part of an equation on what happens with oil prices. Part of it has to do with just good old-fashioned summer driving demand. And I know there's a lot of people out there that have opted to go on a drive trip to Big Bear or to Las Vegas than it is to get on an airplane and fly somewhere because, it's very expensive right now to try to do air travel. Whereas I think that many people should be aware that as we go into the fall and go into the winter, I'm actually more concerned about natural gas prices. I think that we could have a shortage of natural gas going into the fall winter based on reports that I am reading. So I think you have to look at where we might have some reprieve at the gas pump. You might find your utility bills are a little higher than expected going into the fall. And I think it's going to be that kind of herky-jerky, mismatched commodity situation. But as it is right now, the refineries and the oil companies are largely reporting no shortages, no disruption in their flow. The price of oil has basically been secure for a while. Russia and what's going on in Ukraine, that's not disrupting anything. So as long as you don't have any of that, you're fine. The only wild card with oil is always going to be OPEC. And there seems to be a lot more drama going on with what's happening in the Middle East than we've had in recent history. And that geopolitical influence could cause a spike. But, Frank, I think that based on what the Fed's doing, based on where the economy is kind of stabilizing, I don't necessarily think we're going to see any record levels of crude oil going into the fall.
All right. Well, thank you for that thorough assessment here, Ken. And at this point, let me ask you the big question here. Where are you putting money now and or taking it off the table?
Well, it's actually interesting. We have been, as companies reporting numbers, and they're looking like great, it's fine. Let me back up to it real quick. We had such a big pop and run up in a lot of stocks. Many of these companies are priced for perfection. I would just recommend to anybody in the audience, if you're looking at a stock that had a big hit last year, a dramatic rally this year, I would wait before you commit new money. Wait for the earnings to make sure everything's on track, and not so much your interpretation of the earnings, but how the stock reacts to it. And so for me, one of the companies, I'll throw a name out there that probably people would be shocked to hear. They've never even heard of it. It's called A.J. Gallagher. It's actually a financial company that's been around for, I think, about 80 years, and it's by far one of the best performing stocks in the stock market, period, in any industry. So here's an example. Their earnings came out. Everything looked great. We stepped in and bought more of it. The restaurants, I had been buying the restaurants for a while, but as they missed their numbers, I sold off my positions. There's no loyalty here. If a company misses its numbers and it begins to really get hit, I'm getting rid of it. This kind of market, there should be no loyalty. You need to stay with what's working. Last but not least, bonds. I mentioned it earlier. We bought a Ford Motor Company bond not long ago. I think it's coming due in 3.5 years.
Mix a little sports analysis, pop culture, and great interviews, and you've got the Rich Eisen Show podcast.
Whenever I drive separately with Susie, you always have to go first. So sure enough, I pull into the garage. She's not even here yet, which allows me now the opportunity to stand there, just
So
holding
annoying.
the door open,
So annoying.
like the gentleman that I am. And I snapped a photograph of Susie's reaction, and there it is. How did you get here?
The Rich Eisen Show podcast, wherever you listen.
And it's yielding 7.7% per year. I mean, this is Ford. I mean, it's not a company that's going to disappear in 4 years. So I'm just suggesting that a lot of people who had been poo-pooing bonds as I don't need income, I'm suggesting they could be in the race of the tortoise and the hare. They could win the race over the next 3 to 5 years. So I think reallocation into bonds is certainly warranted for most investors.
All right, it's been a while since we've chatted behind live microphones. We had that bank merger last week of PacWest and Bank of California. What do you see happening with the banks? And by the way, here's an interesting headline for you. Banks report toughest loan standards in years. This is something that you've been experiencing, right? You shared that with us. And what is happening with the regional banks now, Ken, in this latest big deal and how this has impacted lending out there, among other things?
Yeah, there's an interesting statistic out that most of the people that work in financial services right now, which would include banks and insurance companies, were not in the industry back during normal times of interest rate structures. So it sounds strange, but these people have only had their career with near zero interest rates, and they're having to adjust. I think bank consolidations, and I will add insurance consolidations, brokerage house consolidations. I mean, the big one right now is Schwab and TD Ameritrade is finally going to finalize their merger, I think, this September. Consolidation in financial companies, I think, will continue because, let's face it, credit is not as ample as it was. Companies that have the flexibility on interest rates and pricing things will do better. I think the same thing can be said about mortgage companies. Anything in financial services is going to be seeing net consolidation as we just see this continued tightening. So I would tell anybody that, I mean, if you happen to bank at a small bank or a credit union, there's a good chance that it might be combined with another company over the next 3 to 5 years. That's nothing to be afraid of, Frank. That's just simply companies being smart and finding ways to have economies of scale moving forward into this new normal.
All right, you touched on it earlier, Ken. Before we let you off the hook here, would you touch any of the media names at this point, given this hot labor summer and Hollywood being shut down at this point?
You know, it is tough, but I have to tell you, I brought the name up a couple of times. There is a preferred stock, which is a high dividend-paying type of investment. I have to tell you, I still think at the end of the day, the studios are not going to go out of business. They probably are going to have to lick their wounds for a while. But take a good look at Paramount Global. They have a preferred out there. I think right now it's paying 11.5% or 12%. Again, it's not for the faint of heart, but I do think you can step in on some of the bigger names that have proper backing, and they will be fine. But it's a mess. I mean, Frank, you're down there every day. You cover it every day. I don't think there's any quick remedy to some of the complicated issues that are there. But if you are a long player, I would bet on that preferred. I just don't see much of a problem with it as I look out in the future.
All right, and the writers and the actors still on the picket lines. Looks like, about 3 months now for the writers and approaching a month here now for the actors, and we'll continue to follow that closely here, of course, and so will the 790 KBC News Department. And Ken Winans, thank you very much for covering it all here tonight, and I look forward to speaking with you again very, very soon.
Take care, Frank. Good night.
Thanks very much. That is Money Manager Ken Winans. With Winans Investments, Forbes Magazine contributor, author of Investment Atlas 1 and 2, live with us here tonight on Mottek On Money on 790 KBC. It is jarring to have a car accident out there and hard to think clearly when you're hurt. So my friend, attorney Clark Fielding of Fielding Law, has created something that'll help you. It's a guide called Be Prepared Before a Motor Vehicle Accident. Now, this guide is one page, fits right there in your glove compartment, and gives you everything you need in case you're hurt in an accident. Go to clarkthesharklaw.com and download your free one-page guide and keep it right there in your glove box and put Clark Fielding's number in your phone, too, under the word accident. So all you have to do is hit the number when you need him. Tell your family and friends to do the same. So if you're hurt in an accident, call the one we all trust, Clark Fielding. The number is 833-88-SHARK, 833-88-SHARK. Again, that's 833-88-SHARK. Be sure to download the Be Prepared Before a Motor Vehicle Accident Guide. Get that at clarkthesharklaw.com, clarkthesharklaw.com. Again, that's clarkthesharklaw.com. 790 KBC welcomes, you guessed it, Belinda Carlisle coming to the Libby Bowl August 24th. Tickets are on sale now at AXS.com. Right now, caller 9 wins at 1-888-790-5222. You can get a pair of tickets to the show if you're caller 9. Call now, 1-888-790-5222. Mottek On Money continues here in 790 KBC. We got the rally going here with the Dow up 100 points to kick off the new week. The S&P 500 up 7 and the NASDAQ up 29. The Dow now stands at 35,559. The S&P 500 at 4589 and the NASDAQ at 14,347. Looks like the major averages at or near highs of 2023. We're seeing impressive gains for the month of July now that the month is in the Wall Street history books. The S&P 500 of 3.1% this month. The NASDAQ gained 4.1% and the Dow rallied 3.4% for the month. The S&P 500 now up 19.5% so far this year. Price of oil right now down 9 cents at $81.71 a barrel. Gold down $6.20 back to $2,003. It's popped above $2K. And we see in the cryptos Bitcoin up about $30 now at $29,218. Ethereum up 3 at $18.55. Doge right now at 8 cents. Among the movers today, AMC Entertainment Holdings, one of the meme names, that theater chain, enjoying its best week ever. Up 7% today based on admissions revenue from July 21st through July 27th, according to the company, setting a new company record for U.S. theaters and global theaters. Shares up 7.1% for AMC Entertainment Holdings. Shares of Ford in the spotlight, slipping about 0.5% after a Jefferies analyst cut his rating to hold after upgrading Ford to buy back in May, citing worse EV losses and strategic wobble. In his words, he trimmed the stock price target to $15 from $17. MarketWatch also reporting shares of SoFi Technologies rallying nearly 20% today after that financial technology company raised its earnings outlook for the full year while beating expectations for the latest quarter. And Quest Diagnostics saying it's brought the first blood-based biomarker test to assess the risk of developing Alzheimer's disease to market. Shares up about 0.5% for Quest Diagnostics. Rent's due. Yep, Los Angeles area residents have until tomorrow to pay back rent for the first year and a half of the COVID pandemic. What's going to happen now? Will there be a wave of evictions? What's next? Let's bring in Daniel YUKELSON now, the executive director of the Apartment Association of Greater Los Angeles. Daniel YUKELSON, thank you very much for joining us live here and, of course, for joining us for all these conversations during this whole situation here with the coming out of the pandemic and the various moratoria and so forth that you've been dealing with and tenants have been helped by. Give us an update now on what this August 1st is going to mean here in Los Angeles.
Well, thanks for having me on, Frank. August 1st is the first of two due dates. Rent owed between March 1st, 2020 and September 30th, 2021 related to COVID is now due on August 1st. And tenants have now had nearly 3 years to contemplate this due date. And, hopefully some have gotten themselves in order and have been communicating with their rental housing provider, making periodic payments. But unfortunately, a big concern is that tenants haven't done anything in this regard. And, they're now expecting some miracle to occur tomorrow where they'll be able to afford a lump sum payment. And in some cases, these tenants own tens, 20 thousands of dollars in past due COVID rent. And it's really going to be a challenge for them. I don't think there's going to be a big wave of evictions here. Evictions are far too painful to go through. They could take up to 6 months and cost up to $50,000. And so they're really a last resort, more of a worst case scenario for rental property owners. What will invariably happen is rental property owners will try to work something out with these renters and try to recover their units so they could rent these units to somebody who's a little more responsible and is going to pay their rent. But, owners just got ripped off these last 3 years. They were left powerless. They couldn't collect rent. They couldn't increase rent. And many owners today are suffering. The majority of owners are independent moms and pops, and they've liquidated their retirement savings to keep buildings afloat. And they're going to be very challenged to get that money back someday.
On the air live with Daniel YUKELSON with the Apartment Association of Greater Los Angeles. So tomorrow, are we going to see scenes like out of the movie Coming to America where the landlord is banging on the door, rent's due?
If they do, they're going to be penalized pretty heavily from the city of Los Angeles.
Oh, really?
So I don't think that's going to happen. There are anti-tenant harassment regulations, which left a lot of property owners not being able to communicate with their tenants this entire time. What our dear mayor is proposing, however, is to pay for private attorneys rather than helping the city's renters pay their past due rent. The mayor has a proposal to spend nearly $40 million initially of Measure ULA funds, and that's the new transfer tax, which is 5.5% on property transfers, and spend that on private attorneys rather than to help pay the rent. And so now property owners are going to experience even more financial pain because they're going to be up against these attorneys that are asking for continuances. They're going to delay these cases and just basically grind rental property owners into the ground.
So, sir, how's this going to work? Figuring rent is probably about $2,500, $3,000 maybe, times how many months now? And are people going to cut a check like that tomorrow?
There may be a few, because there were tenants that didn't pay rent but still went to work every day and bought new cars and went on vacations. What's going to happen is owners will issue notices. In some cases, they may file for evictions, but they're literally going to try to negotiate to recover their units and rent them to somebody else. And these bad actor tenants who didn't pay their rent for many months are basically going to walk with possibly some cash from the property owners, along with a lot of forgiven rent. Owners are desperate today, and even if the owners do succeed in a collection lawsuit, they would only end up getting about pennies on the dollar, because in some cases tenants don't have much more than their wages, and wage garnishments in the state of California, thanks to our governor, are severely limited. And so these collections through a wage garnishment could take 20 years if you're collecting $15,000.
Isn't that something? So how did it work in the olden days? That notice went up, pay rent or quit. You had 3 days to pay rent or leave, right? And then we were told the sheriff shows up. Is that going to happen this time around?
It will, except that after the 3 days, a lawsuit would need to be filed. It's called an unlawful detainer, and that could take up to 6 months to get a final judgment on that. And then it's been taking the LA Sheriff's Department 1 to 2 months after you get that judgment to do a lockout. I just spoke to somebody today who's been waiting more than 2 months for this lockout, and this entire time the tenant has been living rent-free as a squatter.
So in the meantime, how are the landlords holding up in the face of all this? Obviously, there are mortgages to be paid, right, and expenses. So what's happening out there?
Well, there are some that are financially suffering. Some are in foreclosure. Some have been forced to sell their properties at a discount. Many of the borrowings, the mortgages have reset with much higher interest rates. They're now gone from 3% to over 6% in some cases. And the city itself hasn't really helped owners out either. They've doubled their inspection fees. They've increased utility costs for water and electricity. And so the city itself hasn't helped out. And now we have a crisis in property insurance because we've lost 2 major carriers, and people are getting renewals if they're lucky to get a renewal, and they're up 20, 30%. And so owners are really left holding the bag. I keep saying that over and over again, and it's a big shame. A lot of owners are going out of business.
All right, in practical terms then, with everything happening tomorrow, what is your advice for tenants who have to pay this kind of money tomorrow and maybe not able to do it? How's this going to work out?
I know a lot of this discussion sounds pretty cold, but the last thing any human being, particularly rental property owners, want to do is put a family out on the street. And if you're a smart tenant, you're going to be on the phone right now calling your landlord and telling he or she how much you can afford to pay and working something out. That workout may be an exit after several weeks or several months with some sort of payment, or some other agreement should be reached. But you absolutely need to communicate, and you need to make the best effort to pay some of this past due rent. That's all owners really want. They want to get some assurances that some of this rent is going to be paid, and invariably they'll work with you.
What kind of back rent do you estimate the average person owes tomorrow?
Well, the estimate I read in the Wall Street Journal is north of $1 billion. But, of course, that doesn't include all the rent that's been written off because owners have settled just to get their units back. Nor does it include rent that's owed by tenants that just took off and owners have no idea where they went. That's purely LA area, $1 billion estimated by the Wall Street Journal. And on top of that, to make matters worse, Frank, our association has estimated that over $2.6 billion of lost rent increases were incurred. We can't give rent increases for 4 years in the city of Los Angeles.
On an individual basis, what is the amount, do you think, by individuals? It seems like $1 billion per person, given the rents out there. But what's the amount, the average amount renters owe tomorrow on an individual basis?
Typically, what we're finding is renters owe anywhere from 6 months, and in the worst cases, up to 2 years. And the average rent in the LA area is about $2,500. So it's quite a substantial amount.
Certainly. Well, Daniel YUKELSON, thank you very much for taking the call on this. Let's stay in touch this week and see what happens here. And thank you very much for being available to us on this important story here. Daniel YUKELSON, Executive Director of the Apartment Association of Greater Los Angeles, says LA residents have until tomorrow to pay back rent for the first year and a half of the COVID pandemic. This is Mottek On Money on 790 KBC. Folks, does your knee pain keep getting worse? How about that pain in your shoulder or hip or back? Don't let them tell you steroids and surgery are your only options. Take my advice now and call QC Kinetics. It's Frank Mottek here. QC Kinetics can make that pain go away with all natural, advanced regenerative medicine. They're helping people here every day with these amazing natural treatments that restore and repair your damaged joint tissue. It's like turning back the clock. Regenerative medicine uses concentrated healing agents from your very own body to stimulate that tissue in your joint so they work like they're supposed to, and there's zero downtime. QC Kinetics is the nation's leader in this exciting medical breakthrough. Patients here are getting real lasting relief and are saying no to surgery and drugs. If you have pain due to injury or arthritis, this is a remarkable option that you need to check out, and the consultation is free. Call QC Kinetics, locations in Glendale, the city of Orange, Mission Viejo, and now also in Costa Mesa. Call 213-997-PAIN, 213-997-PAIN. Again, that's 213-997-PAIN. Mottek On Money continues here on 790 KBC. Good evening. Some scary headlines out there related to Chinese computer hacking operations, including one, Chinese malware could cut power to U.S. military bases, businesses, and homes, according to a new report. The New York Times says the Biden administration believes China has installed malware on American networks that could affect military operations and other domestic communications, following earlier reports suggesting state-sponsored Chinese hackers had infiltrated U.S. infrastructure networks. The malware, described by one official as a ticking time bomb out there, is designed to interrupt military operations and would allow China to cut off power, water, and communications to American military bases, according to people talking to the Times, though it could also affect homes and businesses all across America. Joining us live now is China expert Gordon Chang, the author of The Coming Collapse of China and the Great U.S.-China Tech War, and on Twitter at Gordon G. Chang. Gordon Chang, thank you very much for taking the call on this big story. Give us your reaction to that report.
Well, the most important thing is that we've known that for decades, China has been penetrating American networks, and not only defense networks, Pentagon networks, but also civilian ones as well. So this should come as no surprise that China has been able to insert this malware. And clearly we need more robust defenses. We hear about this after every hack, and yet nonetheless the Chinese are successful in penetrating our networks.
When are they going to cut off the power?
They'll cut off the power on the first day of a war in Asia. We can expect that they will be able to disrupt the American networks, and especially civilian infrastructure, which is not as hardened as the Pentagon's networks. So Americans should assume that they will have no electricity, no water, no traffic lights, no nothing for a very long time.
What is most vulnerable, do you think, and how did this happen?
Well, this happened for a number of reasons, but one of them is that we have an industry that is not willing to take those measures that are necessary because it costs money. And in peacetime, maybe that is a reasonable decision. But certainly with China preparing for war, we need to harden those networks immediately. And whether industry wants to or not, the President of the United States should order them to do so.
Do you see the report that the U.S. Ambassador to China, Nicholas Burns' email account was broken into by Chinese hackers earlier this month, according to Various reports, the Chinese government denied the incident was part of a large-scale attack. What about that?
Well, certainly Nicholas Burns's email has been penetrated, but so has the unclassified email of cabinet secretaries, including Secretary Gina Raimondo, who is scheduled to go to Beijing in the not-too-distant future. So what we are seeing is a penetration of the State Department, where we had the Assistant Secretary of State for Asia and Pacific Affairs, Daniel Crittenbach. His networks were hacked. And, it just goes down the line. They were looking to see what the United States was saying prior to Secretary of State Blinken's trip to China in June. And apparently they were able to gather quite a lot.
Could you give us an update on some of these big visits that have taken place in China lately, including the Treasury Secretary, former Fed Chair Janet Yellen? We also had Dr. Henry Kissinger there again recently, and the former Secretary of State John Kerry visited. Any more fallout from these high-level visits there?
Well, the visits by Biden administration officials, Secretary Blinken, Secretary Yellen, and climate envoy John Kerry, do not seem to have moved the ball very much, especially the climate czars moved there. And it's largely because China has felt quite bold recently. And so while John Kerry was in Beijing, Xi Jinping was saying that no one is going to affect China's actions on climate change. Well, if that's the case, then why is John Kerry in Beijing, and why are we talking to the Chinese at all about this? I think that Henry Kissinger went there, certainly not at the request of the Biden administration. This is something that it appears Beijing arranged, and it's because it's a little bit of desperation that they feel that they can't talk to the Biden administration in the way that they want. So they figured that they would use their quote-unquote old friend Henry Kissinger for that purpose. Kissinger got a much warmer welcome than Secretary of State Blinken, for instance.
Very interesting. And, of course, we've been talking earlier this hour about the fallout. Tomorrow, back rent is due coming out of the COVID pandemic here in Los Angeles. And what about COVID origins and any more movement on that front and getting to the bottom of how this all happened?
Well, we're seeing more emails from, for instance, Dr. Fauci when he was at the National Institute of Allergy and Infectious Diseases, and prominent virologists. Senator Rand Paul has formally sent a criminal referral to the Justice Department about Dr. Fauci's alleged perjury before the Senate. And indeed, I think it's a clear case of perjury because it was clear while Dr. Fauci was saying that he did not fund gain-of-function research at the Wuhan Institute of Virology, there were actually two published scientific papers, both from 2017, both of them from researchers at the Wuhan Institute of Virology, both describing gain of function, and both in the papers themselves acknowledging funding from Dr. Fauci's National Institute of Allergy and Infectious Diseases. Clearly, Dr. Fauci's institute did fund gain of function at the Wuhan Institute, and his denials of that under repeated questioning on two separate occasions before the Senate do appear to be false.
Very interesting, and that is certainly big news, and we'll stay on that. And on a somewhat lighter note, I don't know if you saw this report, but some people got a chuckle out of it. A zoo in China denies a bear at a zoo is actually a man in a costume. I don't know if you saw this. The pictures might suggest otherwise. A zoo in China being forced to deny rumors swirling over the internet that one of its sun bears is, in fact, a human in a costume. Can we get to the bottom of that big story here now?
I don't know if we're at the bottom of that story now, but we will, because the Chinese people will not let it go. It is amusing. It is something that's happened before in China. The big story in China right now, though, are the floods in Beijing, which actually are quite serious. And so I think that the Chinese people are probably focused more on the tragedy in the Chinese capital than what's happening in their zoos.
Certainly. And 790 KBC News Department is on that. Gordon Chang, thank you very much for that comprehensive update on everything related to China tonight. That is China expert Gordon Chang, the author of The Coming Collapse of China and the Great U.S.-China Tech War, on Twitter at Gordon G. Chang. Gordon Chang, thank you very much for taking the call with us here this evening.
Thank you so much, Frank.
Thank you very much. And coming up, the Legal Eagle is with us. Royal Oaks hosting the KBC News Blitz coming up next. We'll have the latest news for you in just a moment. This is Mottek On Money on 790 KBC. I'll be back again tomorrow evening in the 5 o'clock hour. If you missed any part of the program tonight or any of the other shows recently, You can bring it up on demand, the Mottek On Money podcast at kbc.com, Apple iTunes, and all your favorite podcast platforms. This is Mottek On Money on 790 KBC.